Hi guys, I'm James Orr, founder of Decisive Trading. In this video I'm going to continue on with the small account trading, where basically I have been trading a YouTube account to show people with smaller accounts how you grow your account using compounding and good risk management. In previous videos I mentioned that I wouldn't be doing it in August, purely because August can be a month with very low volatility. And from a personal account, to be honest, I only took about 8 or 9 trades last month, absolutely maximum. But now we're into September, things have picked back up once again. The FTSE is back to normal. We actually had a very strong down day on Friday. So I began trading the YouTube account once again. 9 trading days into September now. The account is up around about 8%. I'm going to do the calculations in the second half of the video, but that will be it again for this month. And what I've done this month also is I've done it slightly different. Basically, when I first started doing the YouTube account, I was just taking blind positions the first couple of months, sort of blind buys, blind sells, so I could also focus on my personal account and take the highest probability trades with the personal account. It's really difficult to try and trade 2 accounts at once. What I've done is for the last couple of months, or 3 months now, I've been using more and more zone trader trades into the YouTube account, so you can see what I usually trade like, basically. The reason I do that is because when I'm trading my methods that I trade every day, there's a lot less losses. It allows me to have a much higher strike rate, and when I take these trades, because they have a higher strike rate, it allows me to get the video out to you faster and show you the results. But also on top of that, it also allows me to show traders. Now I should point out before I say this, I'm not saying this to beginner traders. I'm saying when you develop as a trader and when you become consistent as a trader, what can happen is you do not need to sit at your screen for the full 8-9 hours of the day as a trader. Now there are a lot of traders that do this. They sit at their screens, they take every single trade that they see, and I can guarantee that over the long term they will only be returning an average of 10% per month maximum. It just seems to be the the golden figure between traders. If you're returning 10% per month consistently, you are considered one of the top traders in the world, basically. If you're returning much larger amounts than that, so 25-30% a month, basically it's going to be that you're losing months, you're going to lose 20%, you're going to lose 25% of your account, or you're just purely risking way too much of your capital. But what I'm trying to show you is, this month especially, I've only taken the 2 trades out with 10 AM. So basically all my trades were in the morning. Friday just passed, the trade would have been in the morning. It was a perfect setup. A lot of the subscribers took it, and I completely missed it purely because I had a massive headache and I didn't want to be sitting at my computer, basically. But what it is showing you is that you can look at trading as a part-time venture. You don't need to be sitting in front of your screen all the time to be a trader. I've showed you for the last, I believe this is the 5th month now, and returning sort of 8% at a minimum is what I've been looking for. And I believe the longest I've traded to achieve that in those 5 months is 2 weeks. 2 trading weeks, so 10 trading days basically. When you have a good trading plan, when you're only taking the highest probability trades, it does allow you to be or to have a lot more freedom. It's one of the reasons I really like trading. If you come to trading just looking for money, I find personally that people struggle a lot more because they are chasing what is essentially a dream. You know, it's a long-term endeavor. You have to be willing to work at it long-term before you start to get those benefits. But if you come to trading looking at it like something as I do, which is trading is going to give me freedom. It gives me freedom because on the vast majority of days, I sit at my desk around about 7 o'clock, set everything up, and I can be done by lunchtime. I won't actually trade past the American session, which is at 2:30 anymore. I used to trade past it, but now that's my cutoff. At 2:30, I just consider myself to be finished. The only time I deviated from that was Friday, as I mentioned, because I had that headache. I was done by about 2:45, 2:50. Okay, so what I'm going to do is bring up these results. I'm going to talk you through them. I'm going to show you on the graph as always. But hopefully you guys are starting to get an idea of how you should be looking to trade. You know, consistently building your account, not looking for the very large drawdowns, taking only the risks that align with your trading plan. Obviously, your trading plan has to be a good trading plan. You don't just want to be jumping into the market willy-nilly because you see a pin bar, because you see an engulfing candle, or because you're nearing a previous high, something like that. You need a good trading plan first and foremost, and that's the foundation that allows you to build yourself as a trader, start to develop the psychological side of things, the discipline, and start to really advance. Okay, so I'm probably going to do next month as well on the YouTube account. That'll be 6 months. And then I'm going to stop making the YouTube account videos, purely just because it's very difficult trading 2 accounts at once. I've showed you the 6 months of growth. Hopefully you've got a good idea now of how to set up your Excel sheets, how to look at your results, the wild spikes that you should be looking for, the large drawdowns you should be looking for, that give you an idea that you're doing something incorrectly. Okay guys, so let's now jump on to the IG account and we will have a look. Okay, so Sunday the 11th of September, I have brought up the YouTube account results for the month. First thing we can see is we've had a few break-even trades, you know, the very, very small trades, 450, 60, really even the 14 and the 14 here. Those are also trades where basically the market's been coming back against me and I've exited early. Because the market hasn't been doing what I've been expecting it to do, or it's reacting to a level of support and resistance and then turning against the trade. We've also had one loss right here, £11.10 on the 6th, and all I've done is put all of this data into the Excel sheet once again. If I can just bring it up, here we go. So 7.98% on the month, which is, you know, I've been saying that I've been looking for around about 8% growth on the account each month to show you. 7.98%, overall 49.68%. I've input this data into a line chart for the month once again. We can see steady growth. What we can't see is large spikes up or large spikes down, which is exactly what I have pointed out you should be watching out for, especially as a beginner trader. You know, if you're seeing these wild spikes when you input your data, or even just when you look at your results, if you're seeing wild spikes up or wild spikes down, it's a very, very clear sign that you're trading incorrectly, basically. You're not trading in a sustainable manner if you are seeing large spikes on your results. It tends to be it's because you're risking way, way too much capital, or because you're in and out of the market way too frequently. So 7.98%, what I've also done is I've put all of this data into one line graph. These flat sections obviously are second half of the month when I've not been trading, and this will be August when I wasn't trading. August, as mentioned in the previous video, and we're up 49.68%. What you can see on this line graph is there are no wild spikes. The drawdowns, you can see one here, are small and sustainable. Then we're back to our growth, a sustainable small pullback in relation to the rest of the price data, and then this month is also very similar. I'm likely going to do one more month at this, so that will be 6 months in total. I believe that's a good amount of data for you guys to see. You can see exactly how I'm inputting the data, how I'm trading, and what I'm looking for when I'm trading, the warning signs I'm also looking out for when I'm trading, and hopefully you have found it helpful. Also, you know, what this is showing, as I've already gone over, it's showing that you don't need to be a screen watcher. You don't need to be sitting at your desk, 9 hours a day, 8 hours a day, to get these results. I'm trading for maximum half of the month thus far on every month I've been trading. The vast majority of my trades come before lunchtime. You know, so it's a 2-3 hour actually trading workday. You know, you've got longer when you take into account your setting up, your analysis, things like that. But you know, it's not a full-time stare at your computer, don't move, razor sharp concentration idea. When you get consistent, when you begin to be able to follow your trading plan, you know, if it's a good trading plan, obviously, when you build a discipline, get your emotions in check, start to follow a plan which leads to sustained growth like this, not looking for wild results. You can do it on I would say a part-time basis. Even especially if you're doing something like swing trading also, you don't need to screen watch. You can trade as an aside to your regular income if you choose. Okay, so hopefully that was helpful for this month, guys. 7.98% on the account, and we are sitting up 49.68% overall on this account, which we started back in April. Okay, so I hope you all have a great trading week. I'm James Orr, and thank you.